All right. Thank you so much for tuning in. We have Anthony again. Anthony, we have some big things to talk about today over the weekend, even as early as last week, but really over the weekend when those job reports came out. Okay. So let's get into it. Let's just dive right in. The projections were 175. Economists
Yep.
projected job growth of 175,000, and it actually came in at 114,000. It seems like it's been a frenzy since then. Tell us more, Anthony. Talk to me.
Yep. Yeah. So that was one of the big things that happened last week. But even earlier than that, the Fed had met and said that they were going to most definitely have a lowering of rates in September on September 18th meeting. And so, that already jump started things before the report. So yes, last week was kind of a very big week. We saw a major move in two different parts, and part one of it was the Fed meeting saying that they were going to lower rates on September 18th. They're not sure if it's going to be a quarter of a point or a half of a point. So knowing that they're that positive that rates are going to drop on September 18th, the market reacted. As I was telling you earlier, we were just talking amongst ourselves that the market's always trying to react in advance to happen, not waiting for it to happen. So when you hear those kinds of things, we saw some drops earlier in the week before the jobs report even came out. Then you match that with the poor jobs report, like you just mentioned, and we have a secondary drop on Friday. And interestingly enough, today, which the market dropped even more, but then went right back up, basically leveling off to where we were on Friday. So I mean, every day it's a fluctuation, but today was an interesting one because we thought we saw some more gains, but we kind of lost those gains. I think that there was just an overreaction and a continuing downward trend. But we're back to where we were on Friday, and again, last week was just a very big week, moving week in the market.
So, what would you say? Let's take a quick break from rates. What
Okay.
is that doing to the economy? What does that mean for the actual economy?
Well, the economy's slowing. Unemployment rates are up. The good news is that inflation is coming down, but a lot of times the reason why inflation is coming down is because people aren't spending. When you have the reason inflation stays up is because people are still buying. If you're selling a product at $10 when it used to be $5 and people are still buying it at $10, well, the price isn't going to move. But if people stop buying that product, the product price has to come down in order for people to sell it, in order for these retail places to sell the product. So that's what you're seeing, a slowing of the economy, and that's why inflation is coming down because people aren't buying that $10 product anymore. So now that $10 product has to move down maybe to $7 or $8 in order to get the consumer to purchase it. So you're seeing a slowing of the economy, which is why inflation is coming down a little bit as well.
But in the housing market, we're
Mm.
not necessarily seeing that. We're seeing a pretty steady rise in home values and sales prices overall. So we're
That's
seeing
staying
that,
steady, yeah.
right? That's staying steady. So I say that to say the reason why y'all are probably looking at this video is because yes, there's a rate cut. There has been a rate cut. And we projected this in a previous video. If you want to go back and scroll through the playlist, we projected around September. Now they're set to meet again at that time, but like you said, when we were talking amongst ourselves, it's already happening now. So there may not be a dramatic drop at that point because it's already happening right now because the market is
Mm.
projecting, always projecting. Tell us more about that, Anthony.
Well, so every investor wants to try and get out ahead of what's coming. So when you make an announcement like, "Hey, we're going to see interest rates dropping on September 18th," and they're pretty positive about it, you got people, moving their investments around based on that. So yes, they will get out ahead of it. So on September 18th, you might say, "Hey, I heard on September 18th, the rate's going to drop a half of a percentage point." It's probably already going to be built in prior to that, ahead of the announcement. We'll see what actually happens because the truth is, it's really up to the investors and what they're doing with their money. But typically, they're out ahead of it so that weeks before that actual drop that the Fed is going to announce, you'll see the rate built already, rates having gone to that level because the investors have anticipated it. So it's not like on September 18th you're going to see this massive drop. but there should be some movement of some kind, and we'll see what that is.
Yes,
You
we
can't
will see.
guarantee what it is, but I'm just
We
saying
can't
that
guarantee
for
it.
the most part, they get their interest rates are out ahead of the actual event, which will be September 18th.
Now, is there a chance? I'm hearing that there might be a chance for an emergency Fed meeting.
Yeah, I mean, there's always it depending on what happens with the jobs market. September, what is it? September 9th, I think is the next. They could do an emergency. I haven't really seen that in a long time, but they
Mm,
could do something like that and say, hey, what they're worried about is not lowering rates in time.
right.
So sometimes you can cause a recession if you don't get out ahead of it. And get the rates down at a certain time. So if they feel as though, wow, this jobs report coming out on September 9th is even worse, they might immediately, do it and do it in a big chunk. So now that'll be a big move because right now what they're talking about is quarter of a point to a half a point on September 18th. The market's reacting to that. But what happens if we have really a lot, some more bad data, or we see inflation really dip low, which those reports are going to come out in the coming weeks. So they're sitting and waiting to see these reports. If things are kind of stable, they're going to stick to the September 18th. If they start to see these reports coming in where the economy looks like it's slowing down even more than what it slowed down, this last week, then yeah, they'll hold an emergency meeting and do it right away.
And that's interesting to think about because right now mortgage rates are from a half a point lower to look, you have somebody a full point
Yes, I
lower.
do have one person there. So every instance, everything's not going to be the same across the board. You have
Right, of
different loan
course.
types. Every person is a little bit different. Loan sizes matter. Loan
Hmm.
terms matter. So there are a lot of things that are going to affect. It's not, hey, interest rates dropped this much across the board. Every loan for every person. Everybody's going to be a little bit different. Every loan is going to be a little bit different. There's different loan types and loan sizes. So I do have one person who wanted to buy down his rate to 6.75% using a half of a point buy down. And that same person is able to get down to 5.75% for almost the same exact buy down. So he's in an FHA situation, and I was kind of excited for him because I'm like, that's a major drop.
It's major.
And then on the conventional side, I'm seeing some people more along the lines of a half of a point drop to a little over a half of a point. So it's
That's
fluctuating, yes, but
amazing.
just like you said, half a point to a point, depending on the situation and the loan side.
That's amazing. And that's going to bring in more people that are approved at this rate, if they can, given their situation, DTI, all of that,
Mm.
loan type, all of that works. That could bring someone who wasn't approved to an approved status, correct?
And not only that, I have an obligation now to reach out to so many people. I don't even know how I'm going to be able to do it because it's just there's so many people that I've had approved earlier in the year or towards the end of 2023 that just were not even close because of how rates went up in December. I'm sorry, January, February, March, April, and all trending upwards because of the jobs report mostly, and because the inflation wasn't dropping at that time. So kept going up and up and up, and it's just so many people that I'm going to have to try and get in touch with. I'm going to be working late nights for a while.
Oh, goodness. Look, hopefully
Oh.
you and me both. Because I'm sure that, a lot of you watching this video are already thinking, okay, I need to dive in, whether you're looking to invest or buy, or you want to sell your home so you can get something else. And now this rate can be more attractive to you and more feasible for you and your plan. So, Anthony, thank you so much for telling us about that. I just had to hop on with you and just have this quick little talk about this exciting news because once I'm hearing it, y'all already know I want to share it. So thank you so
Yes,
much for coming on, Anthony. Give us a call and we will get your deal done. Thank you for watching.
absolutely.